You're watching Stock Watch. I'm Zinati Kuman. Joining me to unpack your stock-related questions today are Ricus from PSG Hole in One Ruimsig and Roy Mutooni from Sanlam Investments. Be sure to send your questions through via email to stockwatch@bdtv.co.za, via SMS on 41392 or on X @BusinessDayTV using the hashtag StockWatch. Thank you so much for your time, gents. I was actually looking at the gold miners pretty closely today, and it was just in the top 5 major moves on the JSE. Those were leading, but I did see that they actually fell off at some point. Just wondering what was buoying these miners today. I don't know, usually when the miners are up, you think that there's increased risk in the environment. There's some sort of worry that investors have. Roy, what did you make of that?
It just felt like a little bit of catch-up on the movement on the underlying. You remember, I think between Friday last week and yesterday, there was a little bit of a sell-off, and the gold price came down and they sold off. Then they just recovered. There was no real news apart from everything that's been spoken about this big, beautiful bill and how much it's going to cost and how much it's going to add to debt. So outside of that, it just seems to me the market is still trying to find its level post-period and heading into that whole June 9th story with the tariffs.
Actually, and of course, everybody's celebrating the fact that we are now officially in the second half of the 2025 year, Ricus. What are you focusing on right now? What are you holding on to? What are you letting go of from the first half of the year?
I wish the market worked in years and in months and in half years. But that being said, our all-share index had the best half year in almost 2 decades, driven by metals and minerals, which is up about 74% for the, I think, over that same period. So just following the market, and as you've just mentioned, Dave, taking a look at today's moves, it's still precious metals, and it's still gold pushing higher, it's still platinum pushing higher, it's even silver trying to do a breakout. So our local market attention is definitely on that sector. But we're also seeing some promising fundamental stuff coming through, whether it be benign inflation, which means we could have a bit of a drop in interest rates. Our PMIs manufacturing came out this afternoon. It was doing less bad. So I think there's a general positive sentiment, not only towards the South African market, but certainly emerging markets, ex-China in general. So it's, I think that positive momentum might continue, even with all the uncertainty surrounding tariff and the Trump administration. I think in that sense, the more volatility Trump introduces to the market, the more the market's getting used to it and coping with what he does. So after a very uncertain start, I think people are now just saying, well, Trump's going to do his Trump thing. We're going to concentrate on where we want to put our money and probably continue to deploy, not from America, but refocusing towards more, as I said, emerging markets and even places like Europe and possibly even China.
Very interesting point that you make there, Ricus, with the markets kind of becoming desensitized to Trump's volatile decision-making. We spoke about, obviously, the miners, the gold miners at first, but now let's move on to the diversified miners. Anglo versus BHP. So this is a pensioner in his 70s. I don't need this cash or investment for daily living. Your opinion on these investments for 3 to 5 years. So there's a comparison for a few sectors. Starting off, though, in the sector of diversified miners, there's Anglo American versus BHP. Roy, what do you think of that comparison?
So it's an interesting comparison because you remember we went through the whole palaver of one being bought by the other, or one being potentially bought by the other. Anglo's restructuring itself, getting rid of platinum, getting rid of diamonds, trying to focus on that fertilizer business and its core iron ore and copper, whereas BHP, as the aggressor, seems to be the one that's all organized, fantastic execution, solid track record, and I guess that's the choice. So I think Anglo's has restructured itself in a way that it is a lot smaller, a lot more focused. BHP has a broader spread, has been together for a whole lot longer, so seems a whole lot more efficient and seems to be able to deploy capital and be in a position to buy Anglos. I think the way to think about it, over the next 5 or 6 years, your big macro drivers must be infrastructure investment, replacement of infrastructure in all of these countries, because it's been run down in the US, in Europe, and you've seen all of these countries now starting to spend a lot through the fiscus. So a lot of fiscal spending that typically goes into infrastructure and the sort. So I think the commodity side, particularly as the dollar weakens, will be an attractive place to be. So long as balance sheets are clean and cost of productions remain low, and both of these are actually focusing on keeping the cost of productions low, then what you'll see is volume growth and delivery of more and more commodities into all of these countries, and these guys will do well. You're starting from a very low valuation point right now, and that always works in your favor because they're solid companies, solid balance sheets, and low valuations. You probably can't go wrong in the context of a weakening dollar.
Yeah, and really just noting that, you know, the point that you made, that BHP is kind of the more stable, I guess, the most recent strategic move is them trying to get more copper, and then Anglo American whittling down on its portfolio. But I don't know, Ricus, in terms of Anglo American, would you not be looking at it as, you know, the kind of value that it could offer now, even as the small player, and also maybe I guess trading on the fact that it could be attractive as a takeover target still in the future? Ricus?
Yeah, to your last point, exactly. You know, just because Billiton might not be interested at the moment doesn't mean that somebody else doesn't take a look at it and says, well, we're at the bottom of a cycle. We've got the money. Let's make a bid for Anglo. So that's something that's interesting, and probably counts towards Anglo's favour. If you just take a look at the share price movements, you know, that was the original question, you know, Billiton versus Anglo's.
Yeah.
For the past year and a half, they've basically tracked each other, despite, you know, everything that's happened with the Anglo's portfolio. So there's just taking a pure look at prices, not much to choose between the two. But that being said, as Roy said, Anglo's much more focused. And so restructuring there could benefit it. And I completely agree with Roy. We're probably at the bottom of the commodity cycle. So I think the if question has been answered. I think this is not a bad place to start picking up. The when is the big question. Price momentum in that sector, diversified commodities, still doesn't look great. It's going sideways.
Yeah.
But I would say the probability is to the upside at some stage. It's going to be next month or 6 months, 12 months, not too sure.
All right. Well, Ricus, earlier on you spoke about you know, positive sentiment in terms of interest rates coming down, and obviously offering more purchasing power to consumers. I want to go into the apparel retail space. There's a comparison here being made as well, Mr. Price versus Pepco for the next 3 to 5 years. Roy, I think there's just things that you could argue for both counters. But when you actually get down to it, I mean, where would you be putting your money?
So both of them have restructured quite a bit. Mr. Price went in and bought a lot of other smaller brands, recognizing the proven growth in its core brands, but has maintained its position as a cash retailer. So they've got a whole bunch of other things that are on the side. Pepco, on the other hand, went into Avenida in Brazil and has the flash business that's probably the biggest seller of airtime and cell phones in the country. So they've diversified a lot. Both of them have maintained their, and actually no, not both of them. Pepco has maintained its entry market status through Pep and Ackermans, whereas I think Mr. Price has gone up slightly upmarket beyond them. I think the two of them are run by solid management teams. I think for so long as you get economic growth and employment improving in South Africa, there is a place for both of them.
Okay.
I think the Brazilian opportunity for Pep gives them an opportunity outside the country that can actually grow to a dramatically big business over the medium to longer term. So they're not beholden purely here. Sometimes that's a good thing, sometimes that's a bad thing. I think that's where the investor has to make his call. It seems like Mr. Price would be largely based on building its brands domestically, whereas these guys have the exposure domestically, entry market, and Brazil. That's what you have to pick out. Do you think that Brazil can be a fantastic opportunity for these guys for growth, or do you want to trust yourself purely on the entry-level South African consumer?
Okay. Well, interestingly, I see that TFG is up over 3% today. Ricus, yeah, would you be choosing between Mr. Price or Pepco, or would you be including a counter like TFG in there as well?
TFG, I'm leaving alone for the moment because if one takes a look at that sector, it's retraced quite a bit over the past 3-4 months. It's been picking up over the last week or 2 weeks. So I think that sector is probably at viable levels. But I prefer Mr. Price's strategy to TFG. I think a little bit of debt worries me there, but my preferred counter is and has been Pepco for all of the reasons Roy alluded to. I think Brazil is very exciting, and also their moves into the financial services side of things just gives them a bit more scope for growth than Mr. Price, which is so locally focused.
All right. Well, we are still carrying on with the comparisons. I want to go to Tsogo Sun Gaming versus Sun International. It would seem to me that they are aligned in terms of some operations, but then not really the same in others. Ricus, what would you make of the two in comparison with each other?
I prefer Sun International mainly because it's more diversified, with both the physical gaming side of things possibly not doing all that well because of the competitive of online gaming. But the interesting thing there is I think there's a lot of noise, not only locally but globally, being made about online gaming. So I don't know whether we're going to see some government action on that lot, which would be good for Sun International again. As far as the physical results are concerned. And then obviously the tourism aspect of that is doing very well, I think. So that would be my preferred entry, whereas Tsogo, because of the focus, and the market certainly doesn't like it at the moment, considering the price decline over the past number of months, is not that attractive even at current levels.
Yeah. I mean, Tsogo Sun, hasn't Tsogo Sun Gaming been the kind of laggard in that space, Roy, recently?
I would say when I look at that accommodation gaming industry, the business that I would invest in would be one that has a solid online presence in gambling and in gaming, and a hotel presence in the Western Cape. If you combine those two, then you're playing in the big fields. You're playing where the turnover is there to be had, and where there's actually volume growth. Anybody else, if you're just in physical gaming in all of these casinos and stuff, you're struggling. gaming is moving online. It's very specialized now. It's very difficult for you to make a difference. And remember, with all of these physical gaming businesses, you've got license requirements and investment requirements and all of that. With regards to Sun International, I agree with Ricus. It's a lot more diversified. It has a lot more physical properties in places that are growing, and it's not totally beholden to the gaming side of things. So I would stick with the Sun International side of things rather than so-called gaming.
All right. Well, let's go into Reinet. Of course, the focus of a lot of investor activity and conversation for the last 2 weeks. I did see that I think it gained about 4% again today. The question goes, if Reinet agrees to sell Pension Corp, will they take cash or shares in the acquiring entity? Ricus, I'm just thinking, why would they take shares in the acquiring entity rather than just keeping Pension Corp?
I think I'll phone a friend on that question. That friend is Anton Rupert, because he's the guy that's going to decide whether he wants cash or shares. I wouldn't have a clue as to what that is all about.
Yeah. And I mean, just them agreeing to actually sell it when it is it not that their only asset or the crown jewel at this point, Roy? Selling it, wouldn't it? I don't know. What do you make of that?
So if you think about it, where Reinet came from, this was an investment vehicle that was supposed to facilitate the sale of the BAT stake, which they've effectively done and reinvested internationally. So the local assets went Remgro, the international assets went into Reinet. I think you could call it out of luck or out of their own wisdom or investment expertise, they stumbled upon this PIC business, and this PIC business has been a thumping success. It's grown really well. They've increased their shareholding in it. They're quite a significant shareholder, but the holding company still trades at a discount. So I imagine in their minds, they're figuring, we could either cash out and close this discount and go home with our money and play with it there, or like your investor asks, maybe the person they're negotiating with is an industry specialist and they do like Remgro, where we vend in, we take in your shares, and life goes on. But I think the lifespan of this holding structure has probably come into fruition. It has probably peaked now, and they want to make a call as to what's the next step. Remember, investors have complained about the deep discount. They've complained about the management fee, the fact that the discount's not closing. But Pension Corp is a fantastic business, you see. So I think all these questions are up in the air, and that's what's going through Anton Rupert's mind right now when they're running through this whole negotiation.
All right. Well, let's go into healthcare, Aspen, or manufacturing. What's your take on Aspen at this point? Of course, another one that has been a point of focus for the last few months. A lot of people not really sure if they should still continue holding after that big slump in the share price, or maybe hope for a better future. Ricus, your take?
Well, I think just price-wise, I don't want to see this price go lower than about 115 or 110 rand, because then that would not look very pleasant, just on a technical basis. But at the moment, the price is moving sideways, and I think it's moving sideways because the news broke. The problem, shall we say, production problem they have. I think people are waiting for results to see exactly what happened and how badly it will affect the business. So to me, it's a 50-50 at the moment. If the news is better than expected, price will recover somewhat, although I still don't think, considering the track record, where, to put it frankly, where it's been overpromised and underdelivered for quite a long time. I'm still not comfortable with the business operation itself. But as I said, better than expected news, there will be a price recovery. Otherwise, watch out for that 100 rand, 115 rand level. Any break below that would be very negative.
All right. I do like that you also gave us the technical perspective there as well, Ricus. Roy, there's a specific question for you. Blue Label Telecoms or Telkom, which one do you prefer? Of course, we know that you've been choosing Telkom as your stock pick for a while. I don't know if you're sticking with that or if you'd give Blue Label a chance.
I've interacted I've interacted with both of them quite significantly over the past few months, I must say. So Blue Label Telecom is going through its restructuring. They're thinking about listing Cell C. The platform business is a fantastic business. That whole prepaid side of it is a fantastic one, but there's a lot of restructuring that needs to go through balance sheet and everything. Telkom has put all of that behind them. Valuation-wise, it's still very cheap, despite the big run-up in price. Whereas Blue Label, we still have to come to terms with what's the true valuation of Cell C X the debt and the Blue Label platform. So there's time to flow there, but the share price has been running. So just purely from that comparative, I would rather be in Telkom. I know the story. I can see where they're going. I can see their moat. I can see how they're competing in the market, and the valuation doesn't feel full yet. So yeah, absolutely. At this point in time, I would back Telkom, but I'm definitely watching Blue Label very closely to get a better sense of the numbers once Cell C comes out.
Okay, all right. And I see a dip in Telkom today after that huge run. Of course, it doesn't really compare to the rally that we saw. So I don't know, maybe an opportunity there. Well, let us get to your stock picks. Where else you are seeing opportunity, gents? Ricus, what will it be?
Going for Datatech, specifically following their latest results, they're in the right space in the market globally. As you know, they provide services like cybersecurity and networking and that type of thing, and also software sales and looking after company systems. If you take a look at their valuation compared to their peers, they're not expensive. I think they're sitting on a forward price earnings of about 10 versus the industry of about 13, 14. So there's lots of scope for improvement there. They've got the market mood behind them. They are an obvious beneficiary of the move to AI because such a lot of what they do is involved with that. The price has had a great run over the past year. I still think there's scope for further improvement in that.
All right. I must say that I quite enjoy the story as well. I spoke to Jens Montanana, I think about 2 months ago. Really great story behind the company. Roy, on your side, where are you hanging your hat?
So my pick today is Bidvest. It's a stock that's sold off quite a bit over the past 1 year, and I think it's because the last two halves that they've reported, they've disappointed. They've either come flat or marginally behind. I think this was largely because of the point in the cycle that they were in. The freight business struggled with volumes because of no maize, and also the freight issues going into the ports. They were restructuring, they were making acquisitions internationally, so all the debt accumulated. I think over the next 6 to 12 months, what you're going to see is deleveraging coming through, volumes in the ports starting to improve, and those international businesses beginning to contribute. For the current valuation that stock is trading at, I think you have a reasonable margin of safety that allows you to get in and hold on and wait and see all of this coming through. I think the management team has proven themselves over time with their business model. They've stuck to it, and I think you'll see the benefit over the short to medium term.
All right. Well, thank you so much for your time and for your analysis today, gents. I really appreciate it. That is all for tonight's Stock Watch. Thanks to our guests, Ricus from PSG Hole in One Ruimsig and Roy Mutooni from Sanlam Investments. Up next, the close. Stay watching.